Okay, folks, welcome to Best Stock Charts for the new trading week. This is Bob Desmond at the Contrarian Trader. And for 2024, we're getting back to Best Stock Charts. It's been a while since I did one of these commentaries. I was doing it consistently for quite some time. And then we segued over and into the small account club, which are going to continue in 2024. But I also want to produce the Best Stock Charts for the new trading week as well. So a lot of content coming out in 2024. Happy New Year to everyone. And the symbols we're going to be going over today are JP Morgan as a short, MJ, which is a weed ETF, which is a long-term bullish play. We're seeing a lot of activity in that arena after a big bear market. And I think that bear market may be coming to an end. SO, Southern Company, DVN, Devon Energy, CI, SIGA Group, CINF, which is Cincinnati Financial Corp, and DD, which is DuPont de Nemours. Hopefully I said that accurately, a little bit of French there. So what we're going to talk about here is really high-level stuff of as to why. Why do we want to either short, in this case, JP Morgan, or to buy the other names I've already mentioned? But we're going to do it from a 10,000-foot view, meaning from a weekly perspective. Now, members, I've already gone over the week ahead commentary. That's the week ahead strategy session. I posted that in the members area and sent it out via email. That should be on the website available to you right now. I will be posting entry points, exit points, stop loss points, etc. for these names. And as we proceed into the new trading week and we do market wrap, we'll do a little bit more of a deeper dive as these trades appear executable. Now, these are, with the exception of JP Morgan, longer term trades, meaning several weeks to perhaps even a couple of months. What we're also going to talk about here is the fact that we do have Q4 earnings coming out. So we want to respect the fact that we have earnings reports that are coming out soon. They can create a lot of volatility in the share price, but with that volatility also comes opportunity if you're positioned correctly. Now, one thing that you may find odd about these series of stocks is that, for the most part, they are boring as heck. Most of them financials, others are cyclicals, none of them are technology. And that's the first time in quite some time that I'll be talking about names that are not high growth names. And the reason why I believe that they're appearing on our radar screen is the fact that we have Federal Reserve rate cuts coming up soon in March. What does that mean? It means lower yields on treasury bills. And not so coincidentally, many of the names that I'll be talking about today pay a decent dividend. So as yields get cut lower, people will be chasing stocks that have upside capital appreciation of the share price as well as paying a dividend. And you may be saying, Bob, that rate cut is not going to happen until at least March. Well, remember that the stock market is a forward-looking mechanism. It prices out the future. That's why you hear the phrase, buy the rumor, sell the news. So let's get to it. So first one up is going to be JP Morgan. Now, JP Morgan on a weekly chart is very extended relative to its Keltner channels in green, and in black, it's 2 standard deviation Bollinger Bands. Can it continue up higher? Yes. There is resistance immediately above, and I'll be discussing that short entry point with members, as well as posting it in the members forum. So members, go on over, check that out, and you'll see where we plan on entering the short side. Now, be forewarned that this is Investors Business Daily. JP Morgan is going to be reporting earnings on 1/12 of 2024. Now, this is the only short on our list, and I'm not betting that JP Morgan's going to crash, it's going to go out of business, nothing like that. It's simply overextended and ripe for a sell-off. Otherwise, the banks overall are looking fairly good longer term. And if you get interest rate cuts, all the adverse impacts you saw on the regional banks back in March of 23, well, those pains get alleviated. So these banks, if we get rate cuts, if they're smart, they'll fix their structure of how they have their treasuries laddered out. But that's a different conversation. And by the way, folks, we're going to be going live tomorrow night, Sunday Night Futures Live, 6 p.m. Eastern Standard Time. We do that as well on Thursday nights, 6 p.m. Eastern Standard Time. If you want to get an invite in advance of that live stream, simply use any of the links below. I have a couple of tutorials down there. One is my 5-part video tutorial, my top 5 favorite candlestick patterns. That's free of charge. And the other is a private live stream group for those folks that are interested in how to build a small account using options. So enter your email address on any one of those email lists below. We hate spam too, and you'll get an invite as well in advance of us going live about a half hour, 45 minutes. Next chart up. Now we're going to move towards the more cyclical names. And the first one up is going to be MJ. Now this is an ETF, so we don't need to worry about earnings. But as you can see here, we have in green, you have your Keltner channels. In black, you have your Bollinger Bands. This is very, very tight. In fact, back in August, the Bollinger Bands were inside the Keltner channels. That's what I like to call a Bollinger Band squeeze. And you can see that we rallied heavily. We pulled back, and we've gone into a consolidation. We're tightening up on the Bollinger Bands and the Keltner channels. I think that we're done with this bear market. And you can see this has been a ruthless bear market, and that we are beginning to see signs of life in this sector. And I could take my crayon out, draw a trend line, and you could see that we are breaking out on we have broken out on a weekly time frame. This is optionable, so if you want to buy options, you could certainly do so. I would go out a couple of years on these options. That way you're not tying up too much capital. And I'll be talking with members about as to when we want to get involved with MJ from a longer term perspective. I'm looking at this as a very long-term core position. Speculative, yes, but core position, not a swing trade. A swing trade could be several days to several weeks. We're looking at this as an investment. And if you want to take a look at it on a monthly view, you could see, again, your Bollinger Bands, your Keltner channels tightening up dramatically. And that's a sign of consolidation, compression, and any breakout out of this trading range is going to be ruthless. And again, I'll be posting entry points, exit points, stop loss points in the members area. We have a 14-day free trial offer, so please feel free to take advantage of it. Now, the next few names, back to a weekly chart, the next few names that we're going to be going over are going to be individual stocks, more stodgy, boring names than anything else. But right now, you're in that environment where you want to start looking at these names when nobody else is doing it. Now, the way I found these names is using TrendSpider. This is one of our partners. Now, TrendSpider has an awesome scan, and I'll share it with anybody that joins up. They have a 7-day free trial offer. I believe in it so much, I'm giving it away free to our silver and gold level members. Now, the scan I used was this one, the Contrarian Squeeze. It says daily, but I actually changed it to weekly. And I ran the squeeze on the S&P 500. Here you go. And all these names popped up. And I went through them all, and I chose out the best names that look very, very strong to the upside, not so much to the downside. So the first one up is Southern Company, and they'll be reporting earnings on the 21st of February. It's yielding 3.9%. And you can see that the Bollinger Band squeeze, and let me stop here for a second and explain what the Bollinger Band squeeze is. It's when you have the Bollinger Bands in black trading within the Keltner channels. And what that implies is that you have a tremendous amount of consolidation. And you could see that this consolidation, this trading within this trading range has been going on for about 2 years now. And the phrase that I like to use is that the longer the consolidation, the greater the validation of any breakout. And you can see that last week, in fact, we began to break out of this downtrend channel. And in fact, what we have here is now a higher low. And what we're going to be looking for are higher highs. So what do we have here? We have a stock that's yielding 3.9%. We have the potential for a lot of upside appreciation. The risk is fairly minimal due to the fact that we know that over the past, let's call it 1.5 years, 2 years, We have rock solid support below. So where we're buying this is within a very strong trading range, and we'll be sending out an alert on all of these names when we enter, when we add, and when we exit the positions. The next chart that we're going to be looking at is Devon Energy. Now, Devon is yielding 6.2%, and they're reporting earnings on the 20th of February. It's an energy stock. The energy stocks broke out very recently. You saw a recovery on Friday in oil prices, and that is a very tightly correlated pair, meaning the price of oil and energy stocks. And yet again, we have a situation where the squeeze scanner on TrendSpider revealed that we have a situation where we have the Bollinger Bands in black trading within the Keltner channels. And that is implying that we're getting ready for a breakout or a breakdown fairly soon. So what's the difference here? And let's pause here for a moment to explain. So I'm not quite sure which direction that this is going to go. I think in all probability this is going to get resolved to the upside. But what would increase my bullishness on Devon Energy? Well, the first would be a breakout. Now, we saw some strength recently. Do we have a breakout? Yes, we do. We broke out above this upper band of resistance on a weekly time frame, not insignificant. Now, what else would we be looking for here for a more bullish setup on Devon is something that we have on Southern Company. Now, I'll point this out. Southern Company is trading above all of the spaghetti lines here, and these spaghetti lines represent the Fibonacci moving averages, 5, 8, 21, 34, 55, 89. Now, the fact that we're trading or stacked above those moving averages increase the probability of an upside move significantly. Now, going back to Devon, Devon is not stacked. Yes, it's broken out, but it's not stacked above the same moving averages. In fact, it's struggling to break through the shorter duration moving average. So I'm not as bullish yet on Devon Energy. It's still a little bit suspect. The however is, I like the long consolidation. We've been in the consolidation for about a year in this trading range. We have oil prices that are beginning to move up, as are natural gas prices. And there are a couple of ways to play this. Devon is optionable. So if you don't want to pay $45.94 is where it's closed on Friday, sell a put. 40 strike, 45 strike, and get the shares assigned to you at a discount if, in fact, they move lower. If they don't move lower, well, you put the premium in your pocket. You won't collect the dividend by that strategy. The however is you'll reduce your net basis cost for the share price. Or you could buy the stock, sell covered calls, and in that situation, you would collect the dividend as well as the premium on the covered call. The however is that if, in fact, we do break out, you run the risk of having those shares called away from you if your call side strike is challenged. So a lot of different ways to play Devon Energy here, but I do believe that if oil continues up higher, natural gas continues up higher, Devon Energy is going to move up higher as well. The correlation is just too tight. The next stock up is SIGA Group. Now, SIGA pays a small dividend, 1.6% dividend. They're reporting earnings on the 2nd of February. Now, similar setup here where you still have the Bollinger Bands trading with inside the Keltner channels. The difference between this stock and the other stocks is that we've already begun to really begin to make a move, and we did it last week on volume. So we take our crayon out, we do one of these numbers. So we also have here a W formation. Here's the left side of your W. Here was one pivot point. Here's another one. So it's going to be very soon where the street catches on if they haven't already. And by judging by the volume, they've already caught on to the fact that this stock is in play and in all probability is going to continue up higher. The Bollinger Bands are widening out. The Keltner channels are widening out. That increases the range of the share prices and how much you can expect them to move up higher. There was a very narrow range back here. Now it's beginning to widen out. So it looks as though SIGA is on the move, and it's looking pretty bullish. And again, we're going to be talking about entry points, stop loss points, price targets, etc. with members. And I'll post those stats in the members area for your reference. And don't forget, We have the week ahead commentary strategy session posted in the members area, so members take advantage of it. And again, if you're not currently a member, 14-day free trial offer, and you get immediate access. Cancel at any time. Click of a button in the members area. CINF is the next one up. Now, Cincinnati Financial is going to be reporting earnings on the 13th of February. Their dividend yield is about 2.8%. Taking a look at the technicals, very similar to the other charts that we talked about. Very similar to Southern Company, Devon Energy, SIGA, where we have the Bollinger Bands trading within the Keltner channels. Again, the Bollinger Bands in black. They normally trade outside of the Keltner channels. When you see them trading inside of the Keltner channels, that is a very bullish event, especially when the price is above the major moving averages. And you could see that the 5-period moving average, as noted here in red, is rising up and through the longer duration moving averages. That is very bullish. You want to see all these moving averages moving up higher like they did back here. And very soon, like you saw with SIGA, you're going to see these bands widen out. In fact, they did begin to widen out last week. In terms of a breakout, it's already happened. It's in the rearview mirror. So again, members, we're going to be talking about Cincinnati Financial, where I believe there to be an entry point, stop loss point, and a price target. I won't trade all of these because some of them are overlapping in their business models. I want to choose the best one, and I'll be sending out alerts to members. The however is, you could always reference what I have in the members area in terms of entry points and make your own decisions on your own individual stocks. The next chart up is going to be DuPont, symbol DD. They will be reporting earnings on the 1st of February, sporting a yield of 1.9%, which is not much. The however is that looking at this chart here, in fact, I want to take a look at the monthly chart first. Take a look at what's happening here. We bottomed out in 2020. What did we do? Higher low and a higher high. Double top, we pulled back, higher low. Now I suspect that we are setting up for a rally to retest this high here at around $86.50 per share. The closing share price on Friday was $76.69. I think that this is a reasonable price target for the shares. You can see that on a monthly time frame, the Bollinger Bands in black were inside the Keltner channels. They are now already expanding out weekly view. On a weekly time frame, the Bollinger Bands still remain within the Keltner channels. So I don't think that we've had our big breakout yet. I think that's still yet to come. And this, again, is a very long-term consolidation. And as I mentioned before, the longer the consolidation, the greater the validation of any breakout. To me, is this an investment? No, it's sporting only a 1.9% yield. However, I do see that there is capital appreciation potential here. So we'll be looking to enter this trade and the other symbols for at least a swing trade, with the exception of MJ, which I think is going to be a longer duration trade. Folks, thanks for being here. Remember, we're going live Sunday nights and Thursday nights, 6 p.m. Eastern Standard Time. Use any of the links below. My 5-part video tutorial, my top 5 favorite candlestick patterns. If you're watching this on YouTube, like, subscribe. You know the deal. Leave a comment, and I'll be more than happy to get back to you. And if you have a small account, you're looking to see how we're building a small account, there's a link below to our small account club. We do private live streams in 2024. They were public in 23. They're going private in 24. And I'll probably restart those next week or the week after. Thanks for watching, and I will talk to you soon. Be well.